Following 15 years of outperformance, US equity valuations are nearly twice that of the rest of the world. Or in other words, the market is very confident in the USA versus the rest of the world. Very confident in a range of factors such as earnings, but clearly this difference in valuation reflects that confidence. So looking at this chart and some of the specifics, what we're looking at here is showing the price versus trailing 10-year average earnings, and that's in order to smooth out the distortive effects of cycles and shocks for the USA and for the median of the 46 countries that I keep track of. So aside from the big gap between the USA versus global, so that, almost double valuation that I've mentioned before, another thing actually sticks out. Relative to the past decade, both the USA and the rest of the world are still not cheap. There is a long way to go if we were to revisit the pandemic panic or global financial crisis lows, or even the 2015-16 mini bear lows for that matter. The only thing that we've really done is go back to pre-pandemic levels, but the macro backdrop is vastly different from then, and I would say mostly in a bad way. So we've got higher inflation, monetary tightening versus monetary easing back then, bad geopolitics on many fronts, and also negative wealth effects of late, as many of the key markets are down. So that bad macro, it can easily be overcome or ignored, actually, if the valuation cushion is big enough. And that's the key takeaway in this chart, I reckon. Valuations just aren't cheap enough to compensate for the likelihood of much tighter for longer monetary policy or the possibility of a global recession. Until then, it's best to be a waiting game for better entry or better macro, in my humble and possibly wrong opinion. So that was from the weekly chart storm write-up. Make sure that you go and sign up for that. It's a free weekly email that I put out. And aside from 10 charts on the US market each week, you also get this bonus chart and kind of mini blog section. So definitely check that out.